What's happening, crypto enthusiasts? Get ready for a rapid-fire update that you absolutely cannot afford to miss. The market is moving at lightning speed, and we've got the pulse on every critical development. From eye-opening financial forecasts to surprising shifts in digital asset strategies, this is your essential download. We're diving deep into the stories shaping your portfolio and the future of finance. Don't blink, because you're about to get the inside scoop on what truly matters. First up, a major financial institution is sounding the alarm on a classic safe haven, with implications that could ripple across all markets. Then, we're looking at a potential shakeup in the digital asset space, with some analysts predicting a significant downturn. We've also got intriguing moves from a prominent political family in the crypto arena, adding another layer of complexity to the regulatory landscape. And finally, we're tracking impressive operational updates from a key player in the mining sector. Stick around, because this is Bitcoin Bulletin, and we're bringing you the news that moves the market. Make sure you're subscribed and hit that notification bell so you never miss an update. Goldman Sachs predicts gold could skyrocket amidst Fed uncertainty. This is a major signal from a top financial institution about the future of traditional safe havens and the potential impact on digital assets. Goldman Sachs Group Inc. has issued a striking forecast, suggesting that gold prices could surge to nearly $5,000 per ounce if the Federal Reserve's independence is compromised. This projection is based on the precious metal's enduring role as a store of value, independent of institutional trust. The firm's analysis indicates that even a minor shift, as little as 1% of privately held U.S. Treasury market assets, into gold could trigger such a significant price increase. This scenario underscores growing global anxieties about the stability of central bank autonomy, a concern echoed by European Central Bank President Christine Lagarde, who has warned of serious danger should the Fed's independence falter. Simultaneously, the digital asset market is grappling with its own set of challenges and predictions. Crypto analytics firm Alfractal has identified potential risks of a cyclical downturn beginning as early as October. CEO Joe Wedson suggests that the market might be nearing the end of a 4-year cycle, a historical precursor to bear markets. His model posits that Bitcoin could test support levels around $100,000 before potentially breaking through $140,000 within the same timeframe. However, the validity of this 4-year cycle theory is increasingly debated, especially as institutional investment and speculative trading continue to reshape market dynamics. Bitcoin's recent dip below the 0.95 quantile cost basis signals a broad net distribution and a cooling of the euphoric phase that fueled much of the previous year's rally. Adding to the market's complexity is the increasing involvement of the Trump family in cryptocurrency ventures, which has ignited ethical debates and heightened regulatory scrutiny. The stock market debut of American Bitcoin, a company co-founded by Eric Trump, further blurs the lines between politics and the crypto industry. The company's stock experienced volatility on its first day, reflecting a mix of investor optimism and caution. Critics argue that policies perceived as favoring the crypto industry create an uneven playing field and raise concerns about potential conflicts of interest. President Trump's own stance on asserting control over the Fed adds another layer of uncertainty to the regulatory outlook for Bitcoin and other digital assets. As Bitcoin navigates these uncertainties, investors are increasingly turning their attention to gold as a more stable store of value. Central banks worldwide have been aggressively accumulating gold reserves, pushing the metal to record highs. Some analysts observe historical correlations where Bitcoin tends to follow gold's price movements with a slight delay, suggesting a potential for a renewed rally if gold continues its upward trend. However, the traditional seasonal weakness in September poses a near-term risk for Bitcoin, with historical data indicating a higher probability of price declines during this period. Market participants are closely monitoring Bitcoin's 20-day exponential moving average, currently around $112,438, as a critical indicator for the trend's continuation or reversal. In the broader altcoin market, assets like Solana, Sol, are showing remarkable resilience, outperforming both Bitcoin and Ethereum. Sol's significant surge, attributed to growing institutional interest and the launch of the first US-listed Solana ETF, positions it as a potential successor to Ethereum's earlier rally. The recent approval of the Alpenglow upgrade, aimed at enhancing transaction speeds, further bolsters Solana's prospects. As Bitcoin faces regulatory hurdles and market volatility, alternative assets like Solana offer diversification and innovation for investors seeking new opportunities. The dynamic interplay between gold and Bitcoin highlights the contrasting responses to global economic and political instability. While Bitcoin remains a high-volatility speculative asset, gold is increasingly viewed as a hedge against inflation and central bank uncertainty. The shifting balance between these two asset classes will likely shape investment strategies and market dynamics in the coming months. Hold on tight, the market's volatility is far from over. Next, we're going to explore an incredible story of patience paying off in the world of early Bitcoin investors. Satoshi-era investor turns $4,400 stake into $53 million after 13 years. This is a remarkable testament to the long-term potential of early Bitcoin adoption. A savvy investor, who acquired Bitcoin during its nascent Satoshi era, has realized an astonishing profit of over $53 million after holding their digital assets for nearly 13 years. The initial investment, a modest $4,400, has transformed into a fortune, underscoring the immense long-term growth potential of cryptocurrencies for early adopters. This narrative is a powerful reminder of the patience and foresight required to capitalize on nascent technologies. Details surrounding the exact acquisition date and the specific amount of Bitcoin purchased are scarce, but the magnitude of the profit suggests a significant accumulation of BTC during its earliest days when prices were fractions of a cent. This individual's journey from a small initial stake to a multi-million-dollar return exemplifies the transformative power of early investment in disruptive technologies. It highlights how strategic accumulation and unwavering belief in the underlying technology can yield extraordinary results over time. The story also brings to light the concept of hodling, a term originating from a misspelling of hold, which has become a core philosophy within the cryptocurrency community. It signifies a long-term investment strategy characterized by holding onto digital assets through market volatility, based on the conviction that their value will appreciate significantly over an extended period. This investor's success story is a prime example of the hodl mentality paying off handsomely. Furthermore, this event occurs against a backdrop of renewed interest in older, dormant Bitcoin wallets. As Bitcoin's price continues to attract mainstream attention and institutional investment, dormant assets from the early days are being moved and traded, often resulting in substantial profits for their owners. These whale movements can sometimes influence market dynamics, but more often, they serve as compelling case studies of Bitcoin's enduring value proposition. The implications of such a massive profit realization extend beyond the individual investor. It validates the belief systems of many early Bitcoin adopters and reinforces the narrative of Bitcoin as a potentially significant wealth-generating asset class. For newcomers to the crypto space, it serves as an inspiring, albeit rare, example of the astronomical returns possible through early and patient investment. However, it's crucial to remember that such outlier returns are not typical. The cryptocurrency market remains highly volatile, and investments carry substantial risk. This particular success story is a testament to the unique circumstances of early Bitcoin adoption and the power of long-term holding in a groundbreaking asset. It's a tale of patience, conviction, and the extraordinary rewards that can accompany visionary investment in the digital frontier. From massive profits of the past to potential downturns of the near future, the market is a roller coaster. Next, we'll break down why some analysts are bracing for Bitcoin to dip below $100,000 this September. Analyst warns of Bitcoin plunge below $100,000 this September. This forecast suggests a significant short-term correction could be on the horizon for the leading cryptocurrency. A prominent market analyst has issued a stark warning, predicting that Bitcoin BTC could experience a substantial decline, potentially falling below the $100,000 mark within September. This forecast stems from an analysis of current market conditions, historical price patterns, and prevailing sentiment, suggesting that the cryptocurrency might be poised for a significant downturn in the coming weeks. The prediction has sent ripples of concern through the crypto community, prompting a closer examination of the factors that could drive such a steep price correction. Several key indicators and market dynamics are cited as reasons for this bearish outlook. One significant factor is the potential for a cyclical downturn, as previously discussed, which often follows periods of rapid price appreciation. Analysts point to the possibility that the market has entered a phase where profit-taking becomes more prevalent, leading to increased selling pressure. The current price action, which may show signs of stalling or weakening after a strong rally, could be interpreted as a precursor to a reversal. Furthermore, the macroeconomic environment continues to play a crucial role in shaping investor sentiment and asset prices. Concerns about inflation, interest rate policies, and geopolitical instability can all contribute to risk aversion, leading investors to move capital away from more speculative assets like Bitcoin towards perceived safer havens. Any unfavorable economic data releases or shifts in central bank policies could exacerbate this trend, triggering a sell-off. Technical analysis also plays a part in this bearish prediction. Chart patterns, support and resistance levels, and momentum indicators are being closely watched. If Bitcoin fails to hold key support levels, such as the previously mentioned $112,438 mark, it could signal a breakdown in the trend and open the door for further declines. The failure to maintain upward momentum after a period of consolidation can often precede a sharp correction. The influence of regulatory news and developments cannot be overstated. Any negative regulatory actions or pronouncements from major economies or international bodies could significantly impact Bitcoin's price. Uncertainty surrounding future regulations can deter institutional investors and create an environment of fear, uncertainty, and doubt, FUD, among retail traders, leading to panic selling. This forecast for a sub-$100,000 Bitcoin in September serves as a crucial warning for investors to exercise caution and potentially reevaluate their risk management strategies. While the long-term outlook for Bitcoin may remain bullish for many, short-term fluctuations and corrections are an inherent part of the volatile cryptocurrency market. This analysis highlights the importance of staying informed about market trends, macroeconomic factors, and technical indicators to navigate these potential downturns effectively. Even with potential dips, the infrastructure behind Bitcoin is constantly evolving. Up next, we're getting the latest operational report from a major Bitcoin mining company. MARA reports August Bitcoin production and mining updates. 208 blocks won, holdings exceed 52,000 BTC. This update reveals significant operational achievements and strategic asset accumulation by a leading digital energy company. Bitcoin Bulletin Holdings, Inc. Nasdaq, MARA, a prominent player in the digital energy and infrastructure sector, has released its unaudited Bitcoin production and mining operational updates for August 2025. The company announced a robust performance, having successfully mined 208 blocks during the month. This achievement comes as the global hash rate saw a notable increase of 6% month-over-month, reaching an average of 949 AS. Fred Thiel, chairman and CEO of Bitcoin Bulletin, highlighted that despite a decline in Bitcoin's price during August, the company strategically expanded its treasury, now holding over 52,477 BTC. Thiel further elaborated on the company's operational progress. He noted a 1% growth in energized hash rate compared to the previous month. All mining infrastructure at their Texas wind farm site is reportedly on-site and connected, with the facility on track to be fully operational in the fourth quarter. This expansion signifies a commitment to increasing mining capacity and efficiency. In a significant strategic move, Bitcoin Bulletin also announced the signing of an investment agreement to acquire a 64% stake in Exaon, a subsidiary of EDF, one of the world's largest low-carbon energy producers. The company holds an option to increase its ownership to 75% by 2027. This transaction, anticipated to close in Q4 2025 pending regulatory approvals, aims to formalize the integration of Bitcoin Bulletin's technology stack with AI capabilities. The joint venture is expected to drive innovation in developing solutions that reduce processing costs and secure edge infrastructure, supporting the burgeoning AI economy. To facilitate international growth, Bitcoin Bulletin has also established its European headquarters in Paris, engaging with European business leaders. Operational highlights for August 2025 included the mining of 208 blocks, with the company opting not to sell any mined BTC during the month. As of August 31, 2025, the total holdings stood at 52,477 BTC, which includes Bitcoin that is loaned, actively managed, or pledged as collateral. The company's commitment to expanding its holdings reflects a long-term positive outlook on Bitcoin's value appreciation. Bitcoin Bulletin's strategy appears multifaceted, focusing on enhancing mining operations, expanding geographically, and integrating advanced technologies like AI. The partnership with EDF and the focus on low-carbon energy align with the growing demand for sustainable and efficient digital asset infrastructure. The company's forward-looking statements indicate confidence in its ability to achieve anticipated benefits and synergies from these strategic initiatives. This operational update provides valuable insights into the strategies and performance of a major player in the Bitcoin mining industry. It showcases a company actively expanding its capacity, diversifying its technological integrations, and strategically accumulating assets amidst market fluctuations. And that's a wrap on today's essential market updates. Before you go, let's do a quick recap of the biggest stories. Get ready for the lightning round recap. Goldman Sachs is sounding the alarm on gold potentially hitting $5,000 amid Fed concerns. A lucky Satoshi-era investor just turned $4,400 into a staggering $53 million after 13 years of holding Bitcoin. Meanwhile, one analyst warns Bitcoin could drop below $100,000 this September, adding to market uncertainty. And MARA announced impressive August production figures, mining 208 blocks and boosting their BTC holdings to over 52,000. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that notification bell, leave a comment with your thoughts, and follow us on all social platforms to stay ahead of the curve.